Imagine falling asleep one night, having a very strange dream. You dream that you see your bank and it's closed. You can't access it. And your money's inside the bank and you can't get it out, no matter what you try to do, no matter whom you call. So you wake up a little bit unsettled, think it's a little bit strange. You get dressed and your mind starts to play games. Perhaps this was a premonition. So you get dressed and you decide, maybe I should go down to the bank and see what's actually going down. Let's see if everything's okay. And you head down to your local branch and you uncover the worst case scenario. You see chaos. You see a line of people that begins to go around the corner. You see a sign above the door that says that every depositor can only take out $50 a day. You've stumbled across not your bank having some significant problems. You've come across your bank in free fall, and the bank run has begun. So what's this have to do with Russia? Well, recent news that has come out of Russia just yesterday indicates that the Russian economy is showing signs. We could say it's like a little bit of tremors before the great economic quake that is coming to Russia, of serious problems in the banking sector. And these are so serious that they could quite literally reshape Russia's economy, change the war in Ukraine, and totally change Russian history forever. Now, before I dig into that, do me just one favor. Please like and subscribe. It really helps me out, and I appreciate it. Thank you. So yesterday, while I was reading the Russian government news, I was surprised to see that there was a number of articles talking about how the Ministry of Internal Affairs, which is like the police, were going to try to make it illegal for banks to give out personal loans. Strange, right? Banks, by profession, give out loans. It's what they do. But the argument that was put forward in the newspapers yesterday by the Russian government was that in the interest of fighting people who are trying to scam banks or defraud banks, they were thinking to make it illegal to give out loans. Smells very fishy when you consider that around the world, people try to scam or defraud banks, and yet banks continue to give out loans, and banks continue to make lots of money doing so. So this doesn't really all add up, does it? Sure enough, I asked a friend who happens to be an economist who also studies Russia. And he sent me an article that showed, what do you know? Over 2 million Russians just recently have decided to stop paying their credit card bills. 2 million Russians. That's a lot of people to decide just one day that, sorry, I'm not going to be paying my bills. It's on you. So for banks that are already low on cash, that's nothing less than catastrophic. That's a huge amount of potential loss. But it raises a deeper question. Is this ban on giving out loans really about fighting fraud? Or is it actually about protecting the banking system that's on edge? Quite clearly, this is not about preventing fraud. It's an emergency damage control. And the hope of the Kremlin is that by banning personal loans, that they'll be able to trap liquidity inside of a financial system that's bleeding out money. So what's the deal with the scammers and all this? It's just a cover story. It has nothing to do with protecting the citizens. This is all about shielding the collapsing banks. And they're not stopping a scam. Let's be clear about that. The Russian government is doing nothing to stop a scam as they have advertised. Rather, they're running a scam, which is something they have lots of experience in. So Russia's banking sector, no matter how you cut it, is unraveling. Liquidity has dried up. We see that the defaults are climbing, and even oil, which has always been the magic lifeline for Moscow, that's starting to falter as well. So you have to understand, in Russia, personal loans, they're not luxuries. Everybody has to get them because simply the cost of living is so high and salaries are so low. In Moscow, it's said that the average person pays about 3/4 of their salary for their rent. So when it comes to something else that they would need, whether it's to fix their car or fix a home appliance, they would have to take out a personal loan. But when we see that the banks are cutting them off, that's not going to stabilize the system. What it does is nothing more than signal to us that there's definitely a panic going on in Moscow. To put into context why Russia's in such a bad situation right now that's totally different from other countries in history, is that if we look at a really bad situation, the United States in 2008, for instance, the US was able to get through that. Why? Well, thank God there's the Federal Reserve and the confidence in the US dollar. The US can get through it. You look at other countries that have had significant problems with inflation, like Argentina. What has Argentina got going for it? It's got $2 billion a year coming from the IMF. That helps out a lot. How about Turkey? Turkey's got high inflation. It sure does. But it has $50 billion a year of money coming in from tourism, remittance, and other things. So what does Russia have in its corner? What's going to back it up? It has nothing. It has no buffers whatsoever. It has isolation and has sanctions, and it's between them. And right now, it's very close to having its only two partners, the only two countries buying its oil, India and China, buying more than 80% of the oil from Russia. Once the new U.S. sanctions passed by Lindsey Graham, very good chance that India and China will not be buying Russian oil. And if that's the case, that puts a 30% hole into the Russian national budget. But that's the government. Let's look at how the banks are doing. What did their balance sheet say? Well, they're not doing any better. They're just as badly off as the government is. So currently they hold about $2.2 trillion of total assets. But here's where it gets dicey. They are only liquid for about $209 billion of that. That works out to be 9.5% they're liquid for, according to the central bank this month. So the Russian central bank says they have 9.5% liquidity. Keep in mind, in a healthy banking system, you should have 20 to 30%. So Russia's operating below half danger threshold. In May, the central bank reported that the net liquidity outflow was 13.6 billion. Keep that in mind, 13.6 billion. It's a ton of outflow. And what did the head of the central bank say? She said, our liquid reserves are shrinking, and we must be prepared for volatility. Translation, get ready for chaos. Over 90% of Russian banks' capital is tied up in long-term loans. That means they can't even process large withdrawals. They can't even lend. They can't absorb shocks. The interest rates in Russia are punishingly high, as we've discussed before. Keep in mind the central bank's key interest rate is 21%. And mortgage, as well as consumer lending rates, have climbed to over 30% now. So for ordinary Russians, it's already an arm and a leg to try to get a loan. And now they're going to even cut them off from that. So how desperate you must be to get a loan with 30% interest. And then now they're going to even turn off that option, which of course means that loan sharks will return and it'll be done in the alleys instead of through the banks. So Russia has chosen to just make everything worse for itself, as it typically does. So consumer loan delinquencies have risen by over 22.5%, and non-performing loans are over 16.1% of all consumer credit. Those who are behind on mortgages, it's got a value of over $1.1 billion, and loans that are overdue by more than 90 days is at 10.4%. That's higher than it was during COVID. This is not signs that things are not doing well. People are not paying back the money. They don't have the liquidity. They've taken huge loans. They're not paying back the bank its credit card money or its personal loan money. And the bank now is not able to loan them money. And even if the people tomorrow went and they said to the bank, we want our money, hey, they only have 9.5%. It means they would not be able to give the money to everybody who came. And it's not something that they could fix quickly. There is no easy way for them to gain the liquidity they would need to pay people off who came and said they wanted their money. So why is everything going so bad? Where is this downturn coming from? Well, we can look first at the housing and the construction sectors, because there we see a lot of excitement. So you probably recall that Putin back in 2024 decided to cut off the mortgage subsidies. which was probably a very good idea because that had driven up the mortgages. It had also driven up the value of houses, and it created a bubble. Everything got more expensive because of this. What was the result of that, though? Well, new mortgage approvals dropped by 57%. Housing starts fell by 24%. And in some regions, construction declined by more than 40%. That means that today, when you go around Russia, developers have stopped building. Banks have stopped lending. Home buyers have vanished. And yet, and this is sort of the interesting part, the prices remain incredibly high. But why is that? It's because sellers simply can't afford to lower their prices. Because if they do so, it would bankrupt themselves. So, despite the fact that, yes, as I said earlier, about 3/4 of the average person's income in Moscow goes to rent, they can't afford to lower the prices. Nobody can because they've taken so many loans to not only buy the piece of real estate they have that they're renting out, but they took secondary loans to fix the place up, to remodel it, to furnish it, and they might have taken multiple loans. I want to say it's over 28% of Russians have more than 3 loans related to their apartment, and they're furnishing the apartment, painting it, et cetera, et cetera. They took out multiple loans. So with all that, they say, well, I've got to make back this money somehow. So I'll keep the price high. But there's no buyers. And there's probably never going to be buyers for it. So now they have a lot of empty apartments, people with very high prices that are unwilling to come off of. So what's happening over in the bond market? So regional bond yields have doubled. And 30 billion rubles, which is about $330 million, in infrastructure debt has been downgraded to junk status. $330 million downgraded to junk status. Mortgage and consumer lending institutions are trading near default levels. And this is not some sort of like hypothetical bad case scenario. This is happening as we speak in Russia. And Russia doesn't have the same luck as other countries. As we discussed, Turkey has tourism, Argentina has the IMF, Russia has oil, but it only has oil, and that's it. Oil provides 35% of the Russian national budget, and 80% of those exports go to just those two countries, India and China. And if either reduces purchases or demands lower prices, Russia could lose $50 billion a year, according to International Energy Agency, in April 2025. So the situation is far worse than what it initially even appears, though. Consider this. The oil that comes from Russia, the one that's most common, is called Urals grade oil, and it cost about $20 to $25 per barrel to make. Now, the current price is about $50. So there's not a lot of wiggle room. So even if another country were to come up tomorrow and say, we want more of a discount, we want a better deal, what options does the Kremlin have? It's already not making huge sums of money on these things. They're already paying premium for a lot of things, such as for ghost fleets. It's very difficult for Russia to make ends meet right now. But with the current economic situation, it's going to get much, much more difficult for Russia to make sure that the ends are able to meet. So the Kremlin claims the loan ban is about protecting the banks from fraud. And as we've discussed, in reality, it's really just about freezing the system and cutting off access to credit and slowing down the cash withdrawals so that they can buy more time. And let's imagine if they don't buy time. Let's imagine what would happen if 10% of all the loans defaulted. You know how big of a deal that would be? It's 25 to 40% of regional banks would collapse. 25 to 40% if just 10% of people did not pay back their loans. Keep in mind, we have 2 million who are already not paying their credit cards. We have millions more who have property that they are not able to rent out because it's too expensive, and yet they have to pay monthly on this thing, and their salaries are not going up. And by the way, inflation is about to get really bad in Russia. As we discussed yesterday, it's currently about 80 ruble to the dollar. It's estimated by most Russian bankers that it'll probably get to about 100 to 110 by the end of this year. So yeah, going from 80 to 100, that's a 25% gone. But imagine it gets to 110, or how about it goes up to 120? Now, how are you going to pay back those loans that you took out backed in US dollars? That is, you didn't take it out in rubles, you took it out in dollars. You're going to have a lot of problems trying to figure out how to pay that back. So, what should we look for going ahead? How is it that we should expect to see signs that something is happening? One of the things that I think we can expect to see is that if oil revenues decline, the ruble will definitely go down. We'll see it plummet, and that the capital controls will quickly return. So, what I expect we would see first is the government would impose strict limits on withdrawals from the banks. We'd probably see a lot of bank holidays all of a sudden, and banks being closed for longer periods of time. And there would definitely be a spike in the black market with the dollars, with the euros, and everything else. But then we'll start to see the other secondary effects that we all like to see, such as the empty shelves, the panicked buying, the fear. It'll definitely be coming. Now, what should the US be doing right now? And what should we all be doing right now to help make sure this happens? One is the sanctions that Lindsey Graham wants to put are very important, and they should be totally supported. If we can get India and China out of the market of buying Russian oil, it will be a disaster for Moscow. But also, we have to be sure that we shut down, finally, the ruble to dollar workaround system that's been operating in Turkey and in the United Arab Emirates. It's absolutely insane that up until today, Russia is still able to access dollars. And the other thing that we need to be doing at the same time is freeze Russian state and private debt in the international financial markets. This is not a correction, it's a countdown. Russia's banks are just bleeding right now. And if we do what's necessary, we will decide history. We will brand history. The Russian credit system is seizing up. It's really happening. And its last economic pillar, its singular hope, oil, doesn't look like it can be hoped on for much longer. So the collapse, it's not that it's coming at some point in the future, it's that it's already arrived. And now we should help it to do its best to ravage the Russian economy. Please give a like and subscribe below. I appreciate it. Thank you for watching today. And as always, thank you for supporting Ukraine.